Equity Mates, from our mates at Spaceship. Investing made easy.
Welcome to another episode of Equity Mates, the last one for the Equity Mates week here at AusBiz. We have been enjoying having Sunny in the studio, and we are joined in the studio again. But firstly, my name is Bryce, and as always, I'm joined by my equity buddy, Ren. I forgot that we had Sunny. Forgot to introduce ourselves.
You've had a long week, obviously. You're slipping towards the end of it. But that's okay, because it's been a great week.
It has been.
We've really enjoyed having Sunny with us, learning from your knowledge, getting excited about the opportunities in Asia. On Tuesday, we did a deep dive on the semiconductor industry, so people should go and check that out if they haven't watched it. But two companies that you told us about, which are particularly interesting, Taiwan Semiconductor Manufacturing Company, TSMC, and Samsung. So we're going to spend today's episode deep diving on those two companies and picking your brains about them.
Absolutely.
Yeah. Let's start with TSMC. On Tuesday's episode, you gave us a little bit of an overview about the foundry model that they've pioneered and how they are basically the manufacturer and there are other designers out there. But let's start by really explaining how revolutionary what they did is. Can you tell us the world of semiconductors before TSMC and then how they changed that world?
Yeah, so maybe don't know how far back you want to go.
No, let's go
Far
back.
as possible.
To Moore's law. No, look, I think the way the industry originally evolved was design in-house, manufacturing in-house, and that was kind of the way the industry kind of evolved over the years. And Intel, the champion in that space, had kind of dominated that space for many years. And over time, manufacturing complexity increased, and design was kind of becoming more customized. And the big Apple in the room, I was going to say gorilla, but Apple came along with their smartphone and effectively wanted to outsource the manufacturing, and that opportunity went to TSMC, which created this enormous opportunity, and particularly also because the iPhone was so enormously successful. And over time, what happened was as the R&D budgets were heading towards outsourced manufacturers of semiconductor design, TSMC started to kind of gather the momentum. And so the capital intensity of the industry has really gone exponential over the last 10, 15 years. The leading edge manufacturing plant back in 2010 would have cost $1 to $2 billion US dollars, and now we're talking about 20 to 25 billion US dollars, and the complexity has increased. And so the big change that happened was that Intel a few years ago started to lag TSMC and its partners, and TSMC kind of pushed ahead on foundry manufacturing cost and yields, and Intel really fell behind to the point where Intel's had to rethink its whole manufacturing strategy, and the leading edge is now dominated by both TSMC and Samsung. Now, Samsung, as a quick intro, does a lot of manufacturing for Samsung. Samsung Foundry does a lot of Samsung in manufacturing for Samsung Semiconductor for its chips, so that goes into its smartphones or into its memory business as well. And TSMC is perhaps the only pure play manufacturer at the leading edge in the world, and all the other foundries around the world just haven't been able to catch up, whether they be UMC or all this whole host of other companies around the world.
So then, what is and we spoke about this a little in episode 2, but on Tuesday, what is your thesis, I guess, for TSMC and why is this a great investment opportunity?
Yeah, so look, semiconductor content will increase over time. We know that if we continue to follow Moore's law, semiconductor compute power will double every couple of years. So our devices will become smarter, being able to process more data, and as a result, more and more applications are going to open up, and we're seeing that happen. And we talk about as our cars are getting more intelligent and autonomy is becoming more readable function. It might be very early days in that kind of space, but we know that's the kind of future we're heading towards, or using machine learning in terms of big data sets across the world to make more informed decisions. High performance compute is exponentially going up, a market that we think will probably double over the next 5 years. And the design of these chips is happening across the world. So it's happening within Amazon, or within Google, or within companies like we own, like MediaTek, or in China with companies like ByteDance, who have this enormous data building in their platforms with all their video content that is created, but to better use that data for advertising purposes, for user experience. So chips are customizing. Even the whole crypto craze that we've seen over the last 10 years, it initially started off on GPUs, which are able to do multi-process computing, and now have kind of morphed into sort of ASIC computing power, which is much more defined kind of processes that I want to specialize in to get the best outcome and to lower down costs. The manufacturing of these designs is effectively happening in two companies in the world at the leading edge, Samsung and TSMC. And as we continue to go down to the next generation of leading edge, it's looking more likely that TSMC will move more into a monopoly position.
Yeah, wow.
So I'm going to do some quick back of the envelope maths. $20 to $25 billion to build a new foundry. Apple, at last count, has 200 billion, call it, thereabouts, on their balance sheet in cash. Why wouldn't one of these massive tech companies that seem to want to play in every possible field they can play in try and make their own semiconductors and vertically integrate their supply chain?
Yeah, so that's a interesting dilemma for Intel that have done that, and in a way, what happens is you can think of TSMC as a chef, and the best cake recipes developed by Google or Amazon or Nvidia, AMD are coming to the chef, and the chef then speaks to its equipment suppliers, ASML, Tokyo Electron, AMAT, and customizes and builds and specializes on the kind of equipment that is required to build the world's best cake. And that's kind of the way the industry has evolved into the best of breed in your particular vertical. If it's design, then you focus on design. If it's capital equipment and a particular part of capital equipment, so those companies I mentioned, AMAT or ASML or Tokyo Electron, they specialize in a particular part of the equipment that all comes together at TSMC to make the leading edge chips of the world. So the capital intensity in the industry is just incredibly high. And so as a result, the barriers to entry have become hard. Now that's not to say Apple can't have a go, but I think it's quite important for Apple to remain ahead in semiconductor design and potentially see if it can keep that design margin in-house and then share the manufacturing margin with TSMC.
So there's great structural tailwinds for the industry. There's a duopoly in this foundry model between Samsung and TSMC, but you think TSMC is going to pull ahead. The big tech companies that work in design aren't going to move to manufacturing. You're obviously very bullish about TSMC, but I want to hear you explain the bear case. What could go wrong here?
Yeah, this is a very high stakes industry. And Samsung is not staying still. They're investing hundreds of, the billions of dollars, tens of billions of dollars to stay ahead. And then you've got Intel on the other side, who also don't want to give up on manufacturing and design. And in a way, you could see a situation where maybe at the next node, Samsung does get ahead. Now, it is a high stakes game, so there's a lot of capital that's going in. and they don't potentially have the customer relationships at the moment. But that's not to say they can't get there. So we need to watch that very carefully. Secondly, as this is an incredibly important industry, geopolitics is there. So increasingly, you find that the US and China in their trade wars, which we really actually think is a technology war, it's a risk to the case that potentially that US design houses get banned from using semiconductor manufacturing in Asia, and potentially that Intel gets a lot of state sponsorship to push it up the curve and help it. And secondly, increasingly asking TSMC and Samsung to build manufacturing capacity in US, in Europe, which is also capital intensive. So what's happening, we think, is that supply chains are being duplicated across the world. So there's a few inefficiencies also coming into the equation. Now, we think TSMC can price for it, but again, geopolitics is always hard to predict, so we'll watch this space very closely.
Well, let's move to Samsung. We'll start at the top again. What is the thesis for the investment, and why is this an opportunity that's exciting you?
Yeah, it's a bit like TSMC, which was this huge experiment for Taiwan, which has paid off. Samsung has been this huge experiment for Korea in terms of the development of Korea, and Samsung is a sprawling enterprise of there's a whole host of Samsung group of companies. The one we're interested in is Samsung Electronics, which at the core is the world's leading maker of memory chips, both DRAM and NAND flash. Also has a very impressive foundry business where it competes against TSMC, and it has a big consumer electronics franchise. So Samsung smartphones, washing machines, fridges. I have a Samsung fridge, which I quite enjoy.
You'd hope so, being an investor.
Yeah, invest in what you know, as they say.
And why we like the story is we think that they have these multiple tenets to their business, which we think are all in an interesting phase of the economic cycle today, particularly memory. So memory demand, which is cyclical, is quite structural in terms of the long term, but you do have these cycles. Memory chips are being used more in our phones, particularly as our phones become more compute intense. There's a requirement for more memory chips, but also in data centers, as data centers become more compute intense, there's a demand for more memory chips as well. And we think that's quite structural. We think we're in a very good phase of the memory cycle where pricing is strong, demand is strong, particularly from the large hyperscalers like Amazon and Google and Facebook of the world that are building out DCs across the world, and the demand for memory chips are in a good spot in that cycle. And also that we think Samsung's benefiting from a good corporate reform story where we're seeing evidence of better shareholder buybacks and just focus on shareholder wealth. And we think it's got a multiple ways to win opportunity in a business that is benefiting from the cyclical tailwinds.
I feel we there's a lot of reasons to like Samsung, similar to TSMC, but we've got to ask what's the bear case here? What's some reasons this thesis wouldn't play out?
So Samsung is as we discuss in a very important company to the world. But then you can imagine it's a very important company to Korea. And so as a result, we could find that potentially that there could be nationalistic movements, potentially forcing Samsung to spend money to catch up with TSMC, even though it may not be able to. There's always this geopolitical risks. Korea is an ally of the US. There could be a request for Samsung to build manufacturing plants in the US. So we've got to watch that. We think at the moment, again, also Samsung should be able to price for that outcome if that was to happen. But also the memory cycle is cyclical. Even though we think there's a structural tailwinds over time, we need to be careful that at some point we do think that capex will come in memory chips. It could come from Micron or SK Hynix, another competitor, and it could push the market into oversupply and hurt pricing, like any cyclical commodity industry that may go through. And at the moment, we think those risks are not there yet, but we're watching them very closely.
Well, Sonny, it has been an absolute pleasure having you for this week on AusBiz. We've covered a lot of ground, investing in Asia, semiconductor industry, what's going on there, and obviously 5 stocks by the end of the week. So We do appreciate your time. If people want to get more information on what you're doing at Antipodes, where would be the best place to go? What's your TikTok?
Need to come up with one. So the Antipodes Asia Fund is where we've talked about these opportunities that we're expressing, but the Asia Fund is obviously investing in the broad opportunity set across the whole region, whether it be the decarbonisation of Asia or accessing the middle class consumers of the region. So on our website there's plenty of information on all our strategies and what we're doing in Asia.
Nice. And what's the website?
It's www.antipodespartners.com, and you'll find my smiley face on the website.
Nice. And if you can let us know your TikTok handle, we'll put it in the notes for this show. But again, very much appreciate your time. It's been an absolute pleasure.
Thank you for having me.
That brings us to the end of AusBiz for this week. Hope you really got something out of that. If you did just join us today, we have been lucky enough to sit down with Sunny for the episodes on Monday, Tuesday and Wednesday. So go back and have a listen to those as well. We did cover a lot. So if you want more information on what we're doing at Equity Mates, head to equitymates.com. But otherwise, Ren, busy week and we're back next week.
Big week. We've covered a lot of ground here.
Yes.
A lot to digest,
Yes.
but we'll take the weekend to digest it and then come back fit and raring to go on Monday for another big week here at AusBiz.
Absolutely.
Equity Mates, from our mates at Spaceship. Investing made easy.